Hello and welcome to Unacademy, a one-stop destination for the English medium civil service aspirants. In today's session, let's have a look at why very recently Reserve Bank of India, that is a banking regulator of India, has imposed a restriction on the functioning of Paytm Payment Bank. Now, what are the important points that you need to understand? In the newspapers, in the last couple of days, you must have read various articles regarding this. But should you remember all the points that you have come across? What are the important things that are relevant for UPSC? What is the potential of question being asked? In which part of this discussion, etc.? Let's understand all of it. Now, to begin with, what has been the journey of Paytm Payment Bank? Or to be very precise, the company 197 which established Paytm Payment Bank. 197, or else very famously referred to as the company Paytm, was established in the year 2010. The company became very famous. Very soon it became very famous because one of the companies in India, Uber company, which provides cab hailing services, started promoting Paytm for making quick transactions or quick payments. But the important pivotal point, the most important turning point for the Paytm became the demonetization that was announced by Government of India in the year 2016. Because the government went for or announced the policy of demonetization, there was a large scale push. There was a huge promotion for digital transactions in India. And as such, even today, there is always a huge demand for making digital transactions or digital payments, even today in case of India. So the 2016 became the very important turning point or turning year for the Paytm company, and it became one of the household names for making digital transactions. The punchline Paytm Karo became very famous. After that, Reserve Bank of India, in order to promote financial inclusion, I'll come to this, don't worry. Reserve Bank of India, in order to promote financial inclusion, started promoting differentiated banking institutions. One such banking institution or financial institution for which licenses were issued, the promotion of this institution was done, was the concept of payment bank. Now, many of you ask me, sir, any other institution that was promoted by Reserve Bank of India to promote financial inclusion? And also, what is the term financial inclusion? What does it mean that you are referring to? Two things. One, financial inclusion basically means government will try to provide financial services to the needy people in a very cost-effective manner. I'll repeat the statement. What is a financial inclusion? Government of India providing financial services to the needy people in a very cost-effective manner. For example, Pradhan Mantri Jan Dhan Yojana, which was very recently referred to even in the budget speech. Atal Pension Yojana, Pradhan Mantri Suraksha Bima Yojana, Jeevan Jyoti Bima Yojana, etc. These are some of the examples which are used as an example to say that Government of India, or for that matter even RBI, is promoting financial inclusion. In the context of RBI, Payment Bank was a tool, or let's say a type of institution that was used by RBI to promote financial inclusion. Apart from this, any other financial institution that was used to promote financial inclusion by RBI at this point of time, the answer will be Small Finance Bank, SFB. Now come to the point here. Reserve Bank of India started giving licenses for payment banks. Now question is, what is a payment bank? Why these are called as differentiated banks? Why not a universal bank? Why these are? What are the specific characteristics of a payment bank? Please understand this. Although over a period of time, many of the regulations have been changed, amended by Reserve Bank of India, payment banks are type of financial institutions for which the license is issued by RBI, wherein RBI says payment banks are allowed to collect deposits, but these are not allowed to give loans. I'll repeat the statement. These are no doubt allowed to collect deposits. And even when they collect a deposit, there is a restriction over that also. What is the restriction? When the announcement was done for this model, Reserve Bank of India had set up a restricted deposit collection. That is, the maximum limit that was decided was 1 lakh rupee per customer per depositor. But over a period of time, this 1 lakh rupee has been doubled to 2 lakh rupees. It was doubled, or it has been doubled to 2 lakh rupees. That is, if I am a customer in a payment bank and if I want to keep deposits, what is the maximum amount of deposit that I can keep with a payment bank? Maximum is 2 lakh rupees. Now, apart from this, I said payment banks were not allowed to give loans, which means no credit transactions, no loans, credit cards shall be issued by a payment bank to their customer. But please understand this, even though the payment banks are not allowed to give loans, there is a concept of co-lending. Very, very famous now. Even Paytm is involved in that. Co-lending. What is the idea for co-lending? A bank and an NBFC, non-banking financial company. So, two institutes, a bank and an NBFC, can come together and share certain amount of risk to provide loans. So, co-lending, right, it is allowed for the banks. But individually, can Paytm bank issue a loan to a customer? That is not allowed. And most importantly, apart from this, another very important feature of a payment bank is whenever they collect deposits, they are not allowed to give loans. Then what should they do with the deposits? The payment banks, the restriction or the condition is that more than 3/5 of these deposits or 75% of these deposits, they are supposed to invest in G securities, and remaining they can keep it in any other bank in the form of a deposit. So these are the certain very, very important features that are associated with the concept of payment bank, which was announced by Reserve Bank of India. Multiple companies, institutes, they have applied for license. 197, that is basically the corporate name for Paytm, 197 Communications Limited. In short, if you're reading newspaper, you would have come across OCL, 197 Communications Limited. So even 197 applied, that is Paytm applied for a payment bank license, and it was issued by Reserve Bank of India. So the fortunes of Paytm company, right, in terms of, let's say, getting more market share, etc., this was one more very important outcomes, or let's say one more very important turning point for the company. After this, right, they started providing services of a payment bank. But very soon, in the very next year, Reserve Bank of India sent a warning to this company, saying that some of the regulations which are applicable for a payment bank, this payment bank, that is Paytm Payment Bank, it was not following these regulations. And as such, please understand, because Reserve Bank of India is the banking regulator. Many of you might be thinking, sir, it's a company, it's a payment bank. Why is RBI involved in all of this? My dear, please remember this. Anybody who applies for a license to operate as a bank will automatically come under regulation of Reserve Bank of India. And because RBI is the regulator, banker to the banks, the regulator of the banking sector, at any point of time, if they feel that a bank is not working according to the interest, protection of the interest of the customers, then at any point of time, they can ask you to mend your ways. They can ask you to perform certain functions. They can even cancel your license. That power is given to Reserve Bank of India under Banking Regulation Act. Please remember this. Under Banking Regulation Act of 1949, the power to regulate any banking institute in India comes under or comes to the Reserve Bank of India. And specifically regarding the functioning of payment banks, which provision has been utilized by RBI? Section 35A. Please remember this. This can be asked by UPSC. Section 35A of Banking Regulation Act. Under this, RBI has stated that you, that is Paytm Payment Bank, you are not working in the interest of the customers. Hence, I'll be imposing certain restrictions over your functioning. And is it the first time that RBI is using the powers under Banking Regulation Act of 1949? Absolutely no. Even earlier also, in the case of one more bank, Yes Bank, RBI had used the powers under Banking Regulation Act itself. So 2017, they got the banking license. They started providing the services which are generally provided by a Paytm bank. Then RBI found there were certain KYC violations. KYC basically stands for Know Your Customer violations. So certain KYC violations were observed. RBI sent a warning to the Paytm payment bank, asked them to make certain changes. Then later in 2018, again, right, basically RBI found that Paytm payment bank is not performing according to the expectations. They are not following the guidelines correctly. Then it imposed a ban. It basically stopped Paytm payment bank from, right, acquiring customers. This particular ban, or let's say the stop, was again lifted by RBI, right? And again, very soon RBI found that Paytm was committing certain violations. Despite the repeated warnings, they were not mending their ways. Again, couple of months ago, right, or let's say in the last year, again certain restrictions were imposed by RBI. Penalties were also imposed by RBI. That is also the power with RBI. And finally, on the 31st of January 2024, when most of us were, right, worried about the budget, when most of us were thinking what will the government announce in the budget, etc., that is the interim budget to be very precise, Reserve Bank of India imposed more restrictions on Paytm payment bank, which most of the experts looking at the restrictions are saying it might be a way for RBI to say that we are going to cancel your license because the restrictions are in such nature. That is, in simple terms, Reserve Bank of India has told the Paytm payment bank after February 29th, that is after the end of February 2024, whatever banking services you are providing to your customers, I repeat, whatever banking services, for example, I have a Paytm payment bank account. Can I transfer funds into this account now? Of course, yes. Can I transfer these funds into another account? Yes, perfectly allowed. Can I use these funds to make certain transactions? Perfectly allowed. So these are banking services, or some of the examples of banking services. Right now, I can do anything or any of these banking services, conduct these banking services using my Paytm account. But after February 29th, many of these restrictions will come into force. I cannot transfer funds into this account now. Whatever funds are there, I can utilize them. I can use it to conduct transactions, but I cannot transfer funds. Many of these banking related activities, the payment bank will not be able to provide it to their customers after February 29th. Now, why? Why has RBI taken such a stringent measure? Many of the experts are criticizing or are basically supporting payment bank, that is a Paytm payment bank, and they're saying the restrictions which have been announced by RBI are very stringent, very, very strict. But the RBI has basically given certain arguments to prove or to basically say why these restrictions were necessary. Let's look at one by one all these arguments, or let's say the points which have been given by Reserve Bank of India. RBI says the Paytm payment bank has failed on multiple fronts. An audit was conducted, and the audit has seen on the part of Paytm payment bank, despite giving multiple warnings, despite telling them repeatedly not to do certain things, they have continued to do all of these things. And what are these things that I'm referring to? These are the things. Let's go one by one. First one, know your customer norms or guidelines. Whenever you open a bank account, the bank will conduct a certain process. One of the things that they will take care of it is KYC. Know your customer norms or guidelines, wherein the bank will try to establish the identity, try to find out who the customer is, whether they have the correct identity, whether they have the right address, etc., etc. They'll try to establish certain basic norms or basic identification requirements that the RBI has asked them to do. So in case of a Paytm payment bank, RBI says a lot of these KYC norms have been violated by the Paytm Payment Bank. In many of the customers, there is no availability of KYC documents. For many of the customers, KYC is not yet completed. Even a part of PAN, right, which is again related to the KYC itself, even associated with the PAN, that is, the customers are supposed to submit a PAN data. Whenever you open the bank account, the customer is supposed to provide PAN details to the bank. RBI says the PAN details for many of the customers is not available. For many of the customers, only one PAN number has been given. That is, imagine a situation where my PAN number has been utilized to open bank accounts for thousands of the people. So don't you think that is a very dangerous situation to be in? That is, the RBI says there is a misuse of all of these provisions. So PAN related issues have been violated. The KYC norms, right, there also there is a violation. What about mule accounts as well as money laundering? RBI says whenever the bank, such as a payment bank here, or for that matter any financial institution, does not take care of these basic requirements, such as KYC mandate is not satisfied, they are not following whether the customers are providing right documentation, is there a misuse of the provision where same PAN number is being utilized to open bank accounts for many, etc., there is always a scope of money laundering. Now, many of you will be wondering, sir, what is this money laundering? What is the idea for money laundering? In a simple terminology, or in simple way, if I have to say, or if I want you to understand this, money laundering means using various processes to convert black money into white money. And the money laundering, one of the ways to do that is by using mule accounts. And RBI says, because the KYC norms have been violated, PAN data is not correctly, right, let's say utilized or let's say collected, and same PAN number has been utilized to open bank accounts for many customers, crores of worth of money can be laundered using Paytm payment accounts. Now, how is that possible? And what is this concept of a mule accounting? Please understand this. Mule accounts are basically, mule customers are those customers which are utilized in a process of money laundering. How is that possible? And how is it possible to mule a customer or use a customer as a mule to convert or to launder money? Let's say hypothetically, here is, right, a person who has a huge amount of black money. Whether it is black money or stolen money, it doesn't matter. The person has huge amount of black money. This person will get in touch with me and say, certain amount of money will be transferred into my bank account. Certain amount will be transferred into my bank account, and if I listen to this person and transfer it to another account, I'll be paid certain commission. And what will I do? Because I'm a greedy person, again, just for sake of understanding this, because I'm a greedy person, I want to earn commission here. I will accept the transaction, I'll receive the money and I'll transfer this money into another account. And I'll receive commission from this person. Now, please tell me, is there any way for me to find out whether the money that has been transferred into my account, is it black money or white money? Is it a stolen money or not? There is no way. In order to earn commission, a greedy person automatically will follow this, will abide by this process. So, from my account, it will be transferred into somebody else's account. From the second account, it will be transferred into a third account. From third account, it can be transferred into the fourth account, and finally, it can be transferred into this person's account. But in the process, what has happened? In the process of this transfer, what has happened? Many customers have been used as mules. They have been used in the process, they will earn commission. But in future, let's say this is a stolen money. Police will catch hold of all of these customers, including me. So there is always a danger that whenever these KYC norms are not followed correctly, the mule accounts can be opened, the customers can be used for laundering of the money. And the RBI says there is a possibility that all of this has happened. Next one, no arm's length policy. No arm's length policy. What is this no arm's length policy? 197, that is OCL as a company, that is the Paytm, has got a banking license from Reserve Bank of India and has opened Paytm Payment Bank. All of you okay with this? OCL, that is Paytm has got a license and it has opened Paytm Payment Bank. In a legal sense, OCL is a different entity and Paytm Payment Bank is a different entity. Now, to just make it much more easier for you to digest, in Paytm Payment Bank, there is ownership of 197 company and also, right, 51% of this, 49% of Paytm Payment Bank is owned by OCL, that is 197, in simple terms Paytm, and remaining 51% is owned by Mr. Sharma, Mr. Vijay, who is right again the founder of OCL or 197. So understand the logic here. In legal sense, both are different entities, and whenever these kind of entities are established, the rule RBI says whatever is the functioning of OCL, because OCL has other accounts or other companies also, there should be a difference between whatever infrastructure is used by Paytm Payment Bank from whatever is infrastructure is used by the companies, other entities of OCL. You cannot mix the infrastructure. Same infrastructure, same processes, same apps cannot be utilized. Why? Please understand this. If I open a bank, imagine I'm a billionaire, I have a lot of money, my company will open a bank, then the functions of the bank should be separated from the functions of my other companies. Otherwise, there will be no difference. There will be conflict of interest. There can be misuse of the funds, right? So, etc., etc. So, that is the precise reason whenever you talk about a company being given a license to open a payment bank like this, the RBI mandates that there has to be an arm's length policy. That is, whatever is the functioning of the payment bank, whatever apps they are using, whatever infrastructure they are using, it should be different compared to whatever the other entities of the same company or related company are using. But RBI says many of the times during the audit it has been found that many of the times there is an overlap. Whatever are the infrastructure being used by OCL company, same infrastructure is being used by Paytm Payment Bank as well. And many of the times the apps of OCL has been used by the Paytm Payment Bank to conduct transactions. So the audit has found that there is no arm's length policy. There is a lot of overlap in the functioning and usage of infrastructure. Next, fall compliance submissions. Whenever you are a bank, whatever type of banking license you have, will have to keep on submitting certain data to Reserve Bank of India, because RBI is a regulator. RBI wants you to provide lot of this data, right? So you will have to keep on submitting the data to Reserve Bank of India. For example, right, many of you ask me, sir, what kind of data are you talking about? I'll take a very simple example to make you understand. All of you heard of Basel guidelines, right? Basel guidelines 1, Basel 2 and Basel 3. Now, how do you think RBI will come to know whether you are following the Basel guidelines or not? You have heard of repo rate, reverse repo rate, CRR, SLR, etc. How does RBI come to know you are following these guidelines? In simple terms, RBI is expecting certain documentation to be provided by the banks regarding these compliances. The banks will have to keep on submitting data to RBI. They will have to get these, right, at various points of time. They will have to get the audit reports also to submit to Reserve Bank of India. So in simple terms, the banks will have to keep on submitting data to RBI to show to RBI that, okay, they are complying with all these guidelines. So RBI now says, when the audit was conducted, external audit was conducted for Paytm Payment Bank, lot of times when the compliances were submitted to RBI, when they said that they are following guidelines, they have submitted false compliances. They are simply for the sake of telling RBI, they have said, okay, we are following these guidelines. So RBI looking at all of these, and this is not the first time, please understand this. Many of you might simply feel the punishment is very, very strict for Paytm Bank. RBI says they are not violating the guidelines for the first time. From 2018, we have been telling them. In fact, apart from this also, there was one more instance when there was a certain action taken by RBI on the Paytm Payment Bank. That is, certain years ago, couple of years ago, there was a concern regarding ownership in the payment bank. That is what I'm referring to is 197, I said, has ownership in Paytm Payment Bank. But in 197, there is also investment that is from China. Certain amount of investment has come into 197 company from China. For example, there is a very famous Chinese investment company, financial institution, which is Antfin. Antfin. Now, there was a concern that 197 as well as a Paytm Payment Bank, they are not coming forth. They are basically not being honest in telling the regulator who is the actual owner of these investments. And certain action was taken by Reserve Bank of India on Paytm company or this particular payment bank. So I hope you understand when I say on the face of it, you might feel the punishment is very, very high or very stringent. But RBI says this is not the first time that these people are violating the norms. It has been being done by this company multiple times now. Now, what is the impact of it? What is the impact? I told you, RBI said from 29th, after 29th February, you cannot provide these basic banking services to your customers. For example, most of you will ask me, sir, what kind of restrictions will be imposed? I don't think this will be asked by UPSC, but anyways, what kind of restrictions will be imposed by RBI after the end of February on the Paytm Payment Bank? What will come into force? Wallet linked Paytm Payment Bank's transactions will be stopped. For example, you want to transfer funds into the wallet, not allowed. Can you use the funds within the wallet? Of course, yes. Whatever money is there in your Paytm wallet, you can use it. But can you transfer funds? Absolutely not allowed. Deposits, credit transactions, etc., FASTag transactions, not allowed. Taking on board new customers, can Paytm Payment Bank acquire new customers after February 29th? Again, not allowed. Paytm's payment banks nodal accounts have to be closed. What do you mean by nodal accounts here? 197 has a nodal account. Paytm Payment Bank also has a nodal account. Nodal account basically means the accounts which are opened by Paytm Payment Bank, where the funds will be received and then transferred. For example, if I make a transaction using the Paytm, let's say wallet, and make a payment to a merchant, first the money will be transferred into nodal account, and from the nodal account, it will be transferred to the merchant. So whatever nodal accounts are there, these nodal accounts have to be closed now. But having said so, what will continue to operate? After 29th of February, what will continue to operate? These are the things. For example, QR codes. Can you use QR code of a Paytm to make payments? Of course, yes. Can you use a UPI to make payments? Of course, yes. So many of these transactions, will continue to work, and many of these transactions which effectively represent banking services provided by the payment bank, these will stop working after 29th. So what is the impact of all of this? In what way this will have an impact on Indian economy? Is it important for Indian economy? Of course, yes. Point number one, this announcement by Reserve Bank of India has created a lot of confusion in the market. Confusion in the sense, a common man, a customer of a payment bank doesn't understand the nitty-gritties of announcement of RBI. Many of the customers are concerned, many of the merchants, they do not understand. They are concerned, should they be keeping the QR code of Paytm now? Should they keeping money in the wallet? What will happen to their FASTag which has been issued by Paytm? So there is a lot of confusion. It has created confusion to a certain extent amongst customers. So one, confusion has been created amongst the customers and merchants. And many of you might be feeling that if there is a confusion, what will happen? Simple. If a customer is confused, if a merchant is confused regarding what will happen after February 29, there is no clarity, there is no let's say clarification given by the operators, etc. They may simply stop using the QR codes, the wallets, etc. being provided by Paytm. And that will definitely, no doubt, that will definitely have an impact on the business of the Paytm company. So first one is confusion has been created amongst customers now. Second, this no doubt will have a huge impact on the revenues of 197 Communications Limited. 197 company will be affected. Although the management has tried to write it off and say, yes, there will be impact, but only to the extent of 300 to the 500 crore worth of revenues earned by the company. Some of the experts are skeptical. They are saying a company which majorly generates a lot of revenue by imposing service charges, and this company had basically ring fenced its customers by integrating multiple services. One of the important service was the wallet. One of the very important service was the Paytm bank account. So from the bank account, funds could be transferred, funds could be used to pay for multiple services which are provided by OCL itself, Paytm company itself. So if that banking license is taken away, if those services are not provided, wallets are basically discarded now by the customers, the impact on the company will not be a smaller amount to the extent of 300 to 500, it could be much higher. But again, we'll have to wait and see. We'll have to wait and see what will be the actual impact in terms of revenues or the turnover. Third one, many of the financial technological companies, fintech, in short, this is called as a fintech. Many of these financial technological companies wanted to go for an IPO now. And to be very precise, please understand, the OCL company, that is a Paytm company, has already gone for an IPO. In fact, once the announcement was done by Reserve Bank of India on the 31st of January, once the announcement was done, in the last 2 days, the market price of Paytm has fallen down. It has fallen down. On 2 days, approximately put together for both of these days, the market price has fallen down by more than 36% for the Paytm shares. So a lot of these investors money has already eroded. Lot of money has been lost because of erosion in the market price of the Paytm shares. But apart from this, investor confidence on this company will be dealt with a blow now. Many of these investors might be concerned about the future revenue potential of the company. And what about other financial technological companies? Many of these fintech companies wanted to go for an IPO now. Many experts are saying even this IPO potential of many other fintech companies will be affected now. That will be affected. So these are certain outcomes that we're expecting from the announcement of Reserve Bank of India. Now, based on the discussion that we've had so far, I want to discuss a MCQ question. Consider the following payment regarding payment banks. They are not allowed to issue credit cards. It's a factual statement, yes. And when I say they are not allowed to issue credit cards, please understand, I'm not talking about co-lending model here. Straightforward, I'm asking you whether Paytm Payment Bank alone can they issue a credit card? No, they are not allowed to lend. They are not allowed to issue credit cards. They do not need to maintain capital under Basel guidelines. Very tricky statement. This statement is wrong. Why? Please understand this. Although payment banks, that is Paytm Payment Bank or for that matter, India Post Payment Bank, etc., although they are not involved in the lending activities, please understand, they will face multiple other risks as well. And that is a precise reason under Basel guidelines, yes, they are supposed to maintain the capital requirements. I'm pretty sure all of you heard of Basel guidelines, Basel 1, Basel 2 and Basel 3. And to be very precise here, the capital requirements are 15% of the assets, risk-weighted assets. So second statement, it is wrong. They are supposed to maintain capital adequacy. Third one, the maximum deposit that can be collected per customer is 1 lakh rupees. This is again wrong. It is 2 lakh rupees now, not 1 lakh rupee. So first statement is correct. Second and third are wrong. Right option for the question will be option A, only one is correct. So that's it from my side. If you like these initiatives, please hit the like button. We are planning many more initiatives for the benefit of the students, and it will help us a lot if you encourage us by hitting the subscription button as well. Thank you. Have a great day.